Today we are going to talk about how to get qualified for the most amount of loan, or how to qualify for the most amount of money so that you can purchase the home of your dreams, or maybe you live in a higher cost area and you just need more qualification. Hello, this is David Zai with the Zai Mortgage team. When you qualify for a loan, you really have to look at every single option, and you've got to consider the source that you're qualifying and who you're using to qualify for your loan. So there's a lot of companies, and we hear this day in and day out, and that's what's kept me in business for all these years is, hey, I got qualified for $200,000, but I really want to buy a $250,000 house. The loan officer that I'm currently working with is not giving me any options, or this is what they said I can qualify for. And it could just be a call center representative, or it could be someone that just may not know all the different guidelines and parameters of the loan. So I'm here to break the myth, and I'm here to show you how to qualify for more. So number one, best thing to do is pay down debt. We always talk about game planning in all my videos because game planning is the path to championships, and it's the path to better home ownership. Okay, so we want a game plan, and during the game planning part of buying a home, you want to talk to your loan officer about what debts you have and which ones you should pay down. And I'm just going to give you my most easy formula to use. Okay, we're going to look at all of your debts, and the first thing you need to know is if there's less than 10 payments on those debts left, then those payments can be backed out. That's number one. Number two, we would want to look at the balances versus the monthly payment proportion, okay? So the way to do this is you divide the monthly payment into the current balance and see which ones have the highest debt to balance ratio, and I would pay those down first. So for instance, if you had a $5,000 credit card debt and you had a $2,000 credit card debt, however, the $5,000 credit card debt is only $100 a month and the $2,000 is, let's say, $250 a month, it's going to make a lot more sense to pay off the $2,000 debt with the $250 versus the $5,000 debt. And you can completely pay it off at closing, which would be the easiest way to do it, because if you paid it off before closing, you would have to source your funds, and you would have to source that debt has indeed been paid, and we're going to have an updated balance to show that it's been paid off and the funds have cleared your account. So always pay the debt at closing. The second way to do it is to pay it down below 10 payments, as I mentioned to you. So you don't have to pay these debts off completely. They can be paid down below 11 or less payments, and a lot of these loan programs will help you qualify for a little more. Number two, a larger down payment. Down payments can come in many different forms as long as it's something that can be liquidated, okay? So you can obviously save for it, and I always highly recommend people save. So if your housing payment right now is $800 a month for rent, and you want to buy a $200,000 house, well, I would go ahead and start putting some money away, right? You know, I would put the difference between the $900 a month and maybe $1,300 and just stick that away into some sort of savings vehicle, whether it be a checking or savings account, or what's best is a CD, because if you touch it, it's going to hurt you. Put it in there, see if you can go through maybe 12 months, 15 months, 24 months without having to touch those funds, because if you can, guess what? You can afford that monthly payment. So using your checking and savings is one thing. The other thing is, stock market was super high. I always recommended people that maybe didn't know enough about investing and finances to go ahead and maybe tap into your retirement account or your 401k or TSP. The reason I like those avenues is when it's high and you're tapping into it, well, you're taking money out at the higher value. Or maybe even now when the values are low and you just don't watch it, or you don't know enough about the market, it's something that's really good to tap into. And the reason I say that is, number one, it's a lower interest rate right now. And number two, if you're borrowing money from yourself, guess what? You're paying that interest back to yourself. And the third option is if you took it out of the market, you would take it away from something that you know nothing about and hopefully planning it into a house, which is a different investment vehicle. And hopefully that goes up over time, because what's the one thing we need? We need housing. So number three, all right, we're looking at getting a cosigner. A cosigner is always a great option. Whether you have income or you don't have income, different guidelines are gonna look at everything a little differently. However, you can have an occupant co-borrower, so someone that's gonna cosign with you that's gonna live in the house. as well as a non-occupant co-borrower. So I know I've referenced this in previous videos where we talk about, hey, when my kids get to the age where they're going to move out or go to college, their first business is going to be buying a house. Without any doubts, while we're going out and looking at colleges and we determine which college they're going to go to, we're going to be looking at buying their first house, and we're going to use a really affordable option. I'm not going to have them go to work and not focus on studies. So my plan is to get them their first business, and like I said, it's their house, right? So hopefully we can find a house that is close to campus, that they can meet some buddies and their buddies can move into the house and they can start paying part of the rent. So if we had something like $2,000 a month mortgage obligation and they can get 4 buddies to live in a house paying $500 a piece, guess what? 4 times 5 is $2,000, and my kids are now living for free, but I'm going to still make them contribute $500 because they're going to add an additional $500 onto the principal balance and hopefully pay that down in 48 months or even 60 months after they get out of college, and hopefully have some equity. And at that point, they can decide, do I want to keep the house and continue making money on it? Or do I want to sell it and move it into my first house that I'm going to live in officially at where I get my job? So that's going to be up to them. So a cosigner is a really good option. Number 4, maxing out your potential debt to income ratio with roommates. So if you have a roommate, they can help you offset some of the monthly mortgage payment. And the way that you would want to utilize the roommates and that potential income coming in is you can now talk to your loan officer about maxing out your debt to income ratio. The most common debt to income ratios, let's just say for an FHA loan, would be 31% for your housing expense and 43% for your housing expense plus additional debts. If you've got a roommate covering some of the cost and you're not going to have to cover the entire burden, at that point, maybe you can max out on an FHA, and that would put you at 46 on the front end on just the housing ratio and 56 on the back end with housing ratio and debts. And then finally, without a shadow of a doubt, improve your credit score. Just like anything that you buy nowadays, when you look at the interest rates are all based on what your credit rating is. Going in and paying your debts down before you qualify, or paying your debts down, or asking your loan officer, what should I do to get the maximum credit score, is a really good option. Most loan officers who know what they're doing should be able to tell you exactly what needs to be done. If they're not helping you, give me a call, because that's really how I got into this industry, is by working with some of the most challenging transactions and getting people improved credit score so that they can have better buying power and get better terms. Now, I know I've gone over a lot, but this is really to help you to get more of a house, because values are a little high right now. Use that negotiation, do your research, see how long the houses have been on the market. And I'd love to help you out. My name is David Zai. I can be reached at 757-478-8493. Please comment below if you have anything that you would like for me to talk about in future videos. Subscribe to the channel and like this video. And I will talk to you later. Thanks. Bye.